Hey everyone, it's Friday afternoon again already. 15 minutes before the market closes. Just want to do a quick update. The last video last Friday we were in this area right here. Showed the 5 waves down, labeled that as wave 1. We got the ABC. 5 waves of the C. We've labeled that as wave 2, and this is a complete retracement in the S&P futures, day only, RTH. That's a real double top. And then from here we were looking for 5 waves down. We got that. Wednesday afternoon we published in the blog, put 4 charts in showing that the 5 waves down had ended right here. This was Wednesday afternoon. We made a comment that if this was really another one down, that it would have been better if it would have broke this low right here, because this the smaller degree 1 wave should, in an impulse, in a larger impulse come, it should have broke this low, but it came close to it. But overnight, Wednesday night, early Thursday morning, yesterday morning, we got another subdivision for the wave 4, and then we got a drop to a new low, and that took us below this area right here. So that adds to a little bit that this is a 1 wave, and it subdivides real good. Wave 3 here, up 3, as you can see down here, was the maximum volume, like it should be. So now the question is this really a 1 wave? Was this a 1 wave? Or is this an A and a B and this is a C? Because it looks like it, but it also looks like a 1, 2, and a wave 1 of the larger degree 3. So anyway, we've got these retracement targets up here. We're watching this. There's an overlap right here in the rally that took place yesterday. So this looks like 5 waves up, but this does overlap right here. And that makes it count as an AB, as a WX and Y. And then we've got a flat here, or possibly even a triangle, and then the market moved up this afternoon barely. I think a 1 tick or 2 ticks or something like that, new high. This could be a B wave. We could do a C down and then rally a little further. But if this is a 2 wave, it's already done all that it needs to do. And it's time to get the show on the road, because this is dragging out. We need a third of a third. We need confirmation of a third of a third down right here. So that's what we're watching for. We're watching this correction as a 2. And then looking for confirmation. We need to come down here and break this low, yesterday's low, and get an impulse move going down in 3 to confirm that this rally was a double zigzag and not a 5 waves. So this is the 60-minute chart. Same thing. Our trend line right here was broken yesterday, and the market's just staying right under it, trying to retest it. And that's common, especially for a wave 2. So we'll have to see early next week. Market needs to start down, needs to do 3, 4, and 5 for wave 1. And this wave 1 here at the minute degree needs to come down and take out the low over here, just like this move for this sub-minuet degree 1 did for this minuet degree 1. Needs to make a new low. That's what we need to see here. Anything less than that, and this will gain percentage wise that this is 5 waves, and everyone can clearly see that this is 5 waves. And the only reason that two reasons that we're not counting this as a 5-wave rally. One is because the volume down was really heavy. This volume going up, all the internals going up to here, has been extremely weak. And the second reason is because this best counts as an ABC with a diagonal C wave that we've gone over time and time again. But that's the main reason we're counting this as a correction for now. So if this is an ABC, the volume here was heavier coming down yesterday than this volume is going up. The internals are a little weaker coming up than they were going down, and this looks corrective so far. So we just have to wait and see, and I hate saying that, wait and see. Obviously we've got to wait and see, but there's nothing else for now. We do have short positions on. We went short with stops right at this high and sweated it out, and we're going to hold those through up to a new high right here. And if we get confirmation down, then we'll add to those shorts and try to hold a short position through this. And we're primarily day traders, but this warrants trying to trade this either as a third wave down, or once we get confirmation that the market is still going to rally further. And then this next move up, if it does rally, we need to see some heavy internals take place. Otherwise, this is going to be what happens next. The next chart is the cash market, and no different, trying to test this trend line that was broken yesterday as wave 2. The double zigzag, this move right here took away the triple zigzag, and this 61.8% for B, or for C right here of A that we showed last Friday, still in place. You know, in fifth waves usually have a relationship to the first wave, and in this case this move has a relationship to this third wave. There's no rule for that. Doesn't mean it can't happen. It's just not what you look for in an impulse pattern, but it fits perfectly for an ABC. That would be the third reason why we're counting this as a corrective move. But it doesn't have to be if the market decides. And this move over here, this doesn't have to be an ABC. If the market needs that to be a one wave, that's what it can be. Like we've said before, we've seen 3-wave one waves. We've seen really ugly one waves. We've seen double zigzags, triple zigzags, everything in the world that you would swear was a corrective move, and at some point later on there's no way to count it except a one wave. So regardless of the fact that we're counting this as ABC, it can still be a 1. This could be 3, 4, 5, if that's what the market needs it to be. But we're holding on to this count for now simply because the market internals were so weak going up and they were so heavy, large coming down. That's all that's on this SPX chart. Still need the market to break down, and it needs to do it because it's a series of 1s and 2s, 1 down, 2 up, next smaller degree down, 1, 2 up, and now we need a third of a third to take place. It needs to happen early next week. And that's we'll show the here's the Dow, same exact thing. Dow came right up to the broken trend line, wave 2. Now the Dow did the same ABC as the S&P did, but it reached 76.4% of wave 1. Good target for 2, it came down. It also broke barely below this yesterday, so it did just barely a little more technical damage than the S&P did. But this is what needs to happen. We need to see the market break down in 3, 4, and 5 for 3, 4, and 5 for 1, and this 1 needs to go below this area over here. Same thing in the Dow as in the S&P. So that is all again, and we'll be back, especially if anything significant happens that we can comment on. We'll do another video. Watch the blog, because we keep posting. We post charts on the blog with or without commentary a little more frequently than we do these videos. So we'll see everyone next week. Happy trading.